First up, we've got our panel session about navigating investments in the crypto winter. We have Steve, who is going to be moderating. We have Ben Simpson, the CEO of Collective Shift. Luke Jones, the CFO of Rarestone Capital. Adam Switzer, CEO of Leonie Hill AI. And Jacob Pritchard, institutional sales of Binance.
Okay, welcome everyone. So this is obviously an interesting time for crypto. You know, I think I was just checking out before, just ahead of this. I think crypto sits at around just over 30,000 today. It did hit close to sort of 90,000. Now, for anyone that's been sort of in crypto for longer than sort of 4 to 5 years, you typically know that this is not unusual for crypto to go to this cycle. And so I suppose let's start off with everyone just providing a quick introduction to yourselves, and then we'll go through the questions, starting with you.
Yeah, hi everyone.
Yep, it's on.
Yep. I'm Adam Switzer, the CEO of Leonie Hill AI, and come from a very traditional finance background as a quant risk manager and running very large tech systems. And us at Leonie Hill, we founded a technology business to provide crypto access to the mid-market, so wealth managers, trading houses and so on, in a very stable, traditional way to sort of preempt the wave of regulation and transformation coming on.
Hi guys. Wow, that really doesn't sound like it's on. Luke Jones from Rarestone Capital. So I started in crypto, probably in 2016 with a startup trying to help people invest in the space, and then moved into the venture space in like 2020. And so, yeah, basically we operate a fairly degenerate cryptocurrency fund where we invest in early stage crypto startups, and then, up until recently that was going really well, but deals are a bit dodgy now. So,
g'day, my name is Ben Simpson. I'm the founder and CEO of Collective Shift. I flew in from Tasmania last night, so lucky they let me in with my passport. I've been in a little while. So I run a company that helps people invest through education and research. So we have a couple of thousand investors that subscribe through a membership platform. We deliver education because I think there's a big gap in Web3 and education. So that's my focus.
Hello everyone, my name's Jacob Pritchard. I came from a very traditional finance background, wealth management, stockbroking. Recently moved to Binance.com. I service institutional clients here for the APAC region as well. So I know there's a lot of clients here at the moment, and obviously a lot of potential guys as well. So I look forward to talking with you all. But I work with all our VIP clients, starting from VIP 3 and above. So starting at $20 million a month in volume and upwards of $5 billion for our high frequency guys. So look forward to all the questions. Look forward to hearing from you. Thank you.
I bet a few people's jaws just dropped at the idea of $20 million a month of volume on crypto. Ben, I'll kick off with you, just as a starting point. You're obviously got, you mentioned you got a few thousand people on your membership. How are you helping them, or what are you sort of giving guidance on how to approach crypto winter?
It's a good question. I think it depends when the investors started. So I think for those who invested in November as their first intro to crypto, welcome. It is tough. I think a lot of people tend to panic, and a lot of people that don't have the education and don't understand what they're investing into. My brother, for example, wanted to get into crypto in November. I said, DCA into Bitcoin and Ethereum, and he goes and loads up on Luna. So, we're just now at zero. So I think it's important to understand what you're investing into and starting off with Bitcoin as the first entry point. But for those people that have been around for a little while, like some people that have been into the space, this is just another day in crypto. Bitcoin's been down 70%, 50% more than 5 or 6 times. It's just the nature of an early technology, a volatile market, trades 24/7. It's just the space. So for me, it's just education is what we're trying to push.
And Jacob, from your perspective, you're obviously seeing it at an institution. What are you actually seeing on the exchanges? How are people actually, I suppose, adjusting their portfolio during this period?
Yeah, it's a little bit surprising because obviously late last year, I think we saw the market getting quite hot, and there was still some speculation from retail guys that there was institutional money waiting on the sidelines for, let's say, regulation. And it's not exactly correct, but obviously it was a little bit of a hope that this would continue the bull cycle that we're seeing. But as soon as the market dropped, and no doubt it did drop quite aggressively, we're seeing a lot more resilience this time. Like I'm noticing companies are building quite aggressively. everyone doesn't seem as negative as what we saw in 2017. I think everyone remembers that there was a lot of, I guess, hate towards it and people dismissing it. But institutions are building really strong at the moment. So like as soon as that dropped, we did get inundated with new business applications, guys starting. Now, don't take this that people are buying and we're going to make the market go higher or anything like that, but companies are definitely developing and there's support there, which is good to see. So I guess what we'll see over the next couple of years will be really interesting.
So Luke, as you mentioned, you deal in the degenerate area. I'd like to call it more exciting than degenerate, but the business building area is an interesting one. I find when you go through these sort of crypto cycles, when it goes through the crypto bull market, then into the crypto winter, it's basically crypto bull market is how much money can you raise, and then crypto winter feels like how much can you build. What do you see in your sort of startups that you've sort of backed or that you're coming across?
Yeah, no, I disagree. I think that it is the early stage in a bull, like say you're saying end of 2021, so early 2021, stuff like that. It wasn't so much how much can you raise. You were seeing really, really strong startups with valuations or crypto valuations anyway, fully like with a fully diluted value of like maybe 10 million market cap, which, or even less, like sometimes 4 or 5 million, and they'd only raise like a couple $100,000. And this is when we were seeing, say, Ethereum go from $300 up to 1,000, which is a fairly decent run, you know, at the end of the day. Since the all-time high before that was like 1,400. Whereas then when you start to get late cycles, so since November, so since the top came in, you're now seeing, you know, bullshit, metaverse, GameFi crap coming up with like a $50 to $100 million FDV. So that's when you get late cycle, you get that. And then now we're seeing early bull. Now you're getting late stage projects coming out that are basically the same stuff, just with a lower valuation. So I would probably argue nothing particularly innovative, like we're seeing, you know, pretty much a lot of trash. But then once valuations start to come down and you start to see a lot more, I'd probably say fly-by-night participants leave, then you see actual innovation coming. So if you have a look compared to like this cycle compared to the last one, I mean, the main project that everyone remembers that was really, really good was something like Ethland, which then became Aave, which was essentially one of the two founding sort of, you know, components of what eventually became DeFi. Which was Compound and Aave. And that was sort of like, that got to fractions of a cent during a bull market, and they raised late cycle. So there will be some gems hidden there, but I think that yet again, it's going to be one of those ones where we see 95% of this stuff just disappear.
Got you. And Adam, just heading over to you, you've obviously got a different perspective where you guys sort of deal with wealth managers and you sort of see the volumes that come in. So typically during sort of the bull cycles, wealth managers are concerned about, you know, how high the price is going up to, but yet obviously they're interested and want to know more. How have you seen that shift over the last sort of 12 to 18 months?
I think a couple of good points that you know, Luke and Jacob both mentioned as well, just before I answer your question directly, Steve, is that it doesn't always go away, and I think a lot of the fluff and the hype will go away, but still seeing a lot of people investing in projects and really starting to realise the value of blockchain. And I think that's what you'll see sustain and come back out the other side. I think key things to consider is it's not just a crypto winter, actually, it's all global markets. So keep that broader perspective in mind that, you know, some of the crypto markets are faring better than some of the traditional sectors. In terms of the shift, and I think we were just at the start of the adoption cycle from post-hype, sort of 12 to 18 months ago. And the wealth sector was kind of crying out for access to the markets. How do we get involved, but how do we get involved in a secure way? So I think we're still at that kind of early mass adoption wave, and very, very similar, again, contextualizing back to traditional markets. I lived and breathed on the trading floors at some of the big banks all throughout the GFC, and it was a very interesting time to go through because those that had a really strong risk culture could see it coming. They were well capitalized, they knew what to do, and a lot of the others were spewing assets out. So it was a very opportunistic time as well for those that had the stomach for it and had the discipline. So I think the key for us in the wealth sector in this early adoption phase is you'll get a lot of people that will shy away and say maybe it's, you know, another cycle and we'll come back to it. We're still getting a lot of interest like that. build during the winter and start to get things in place. And I think part of that will be making sure that, again, we'll talk about it a little bit later, I think, around the regulatory space and the confidence and trust that, you hold assets securely, they do exist, that people aren't, taking them and doing things that they shouldn't be doing in a way that banks and trading houses are regulated. So the way, I guess, the way we've structured our business and what we're certainly seeing from some of our clients is they want things in a traditional way that they can point at the assets, they can trust the people you're dealing with, which is a little bit sort of anti the decentralized model of where crypto is coming from. But again, you look at the other extreme, and some of the exchanges is actually too centralized for some of these people to deal with, because they don't know what's going on in that black box. So sitting in that space is where people are looking to get comfort in the wealth sector. And like every part of the market, it's a little bit of caution, but those that are smart and believe will continue to allocate part of their portfolio to the crypto sector.
Thanks, Adam. And Ben, going back to you, you mentioned about you sort of gave your brother guidance on a sort of DCA, the dollar cost averaging approach to sort of investing in crypto. Now, sort of in the winter period, number one is, and I'll go through this, everyone, how long do you expect the sort of crypto winter to last? And then secondly, what do you see as being, I suppose, one of the key factors to, I suppose, help, the markets break out of that cycle sort of going forward?
Yeah, it's a good question. And I think, it was answered over here previously. I think it's not just crypto that's down right now, it's every market. Snapchat and tech stocks are trading like, shit coins right now. So it's not just crypto. I think, inflation numbers, macro, war, et cetera, it just goes on.
Everything I had on my first slide.
is really putting downwards pressure. And I think the month of June was just a shitstorm for crypto. Like, we had every institution under the sun seemingly, either going under or being liquidated, and there was forced market selling. There was so much stuff going on in that month. But yeah, crypto actually held up relatively well, I think, in comparison. Now, the question is, right now, we had a bit of a, whatever you want to call it, a relief rally. Is the bear market over? I don't know. I don't think so. I think, if you look at any other market in the macro right now, I think it's going to be tough to use this as an influencer to bring the bull market back. So for me, I think we could be here for a little while, chopping around. But I think we're going to look at this phase as a great accumulation time, a great time to be accumulating, some of those blue chip assets. I think we're pretty much undervalued at this point, and that's what we're pushing to our members.
Perfect. Luke, you mentioned you obviously do work with startups. Do you also do work with corporates as well?
No, we don't do much in that space. I mean, through our clients maybe, but as far as we don't take out outside investment or anything like that, so we don't really have any need to deal in that space.
Well, a question I have is, in this sort of building period, and maybe someone may be better to answer, I'm just curious, because typically what happens when, like, for example, I noticed MasterCard put out an announcement, was it 2 days ago, mentioning that they joined up with Blockchain Australia on their global sort of international channel. I thought that was quite interesting. And there's obviously been a lot of corporates investing heavily sort of into this space. Have you seen, like I said, I don't know who's best to answer, have you seen any changes in that? Is that still progressing as per was, or is it just going under the radar? What's sort of changed in that area?
Yeah, it's not really my field. The only thing I could say from an anecdotal standpoint is that the exact same thing happened in 2018, and 99% of the time it was just like public pandering, like publicity stunts and things, like the whole Long Island blockchain thing and all that. So when companies say they're implementing blockchain the same way that the Dubai government says they're implementing blockchain, it doesn't necessarily mean that they're actually doing anything particularly innovative. And I've experienced that firsthand. So yeah, I wouldn't be overly excited when MasterCard says we're allowing people to do stuff through blockchain, because if they're allowing people to make payments through crypto, they're not going to be doing that themselves. They're going to be using some other intermediary to facilitate that third-party payment. So, I mean, that would be my only anecdotal comment on that.
Anyone else?
Yeah, I might add a little bit. I've got a very corporate banking background. So typically what happens is, again, back to the macro cycles, is investment budgets go down across the whole business. I think that's inevitable, especially if some businesses aren't doing well and if we hit recession or whatnot. So you'll naturally see that. I don't think that's a sign of people shying away from blockchain. And certainly from the experiences I've had is the best companies will still invest in things that are smart to do. But totally to your point is that I wouldn't necessarily hold them to be the ones that are innovating throughout the whole space. I think what you'll see is a focus on the big players looking at things like stables, payment channels, infrastructure, shaping regulation, and partnering. I think competition, for lack of a better word, is essentially people working together to build the better than some of their parts. And I think you'll see a lot of that with the big guys who are trying to either sweep in or partner with people who've got great ideas, or other smaller companies working together to build great things. So yeah, it won't go away. It'll be different. The smart ones will be there, but a whole natural haircut on investment is probably totally reasonable.
Yeah, I was going to say one of the interesting ones I found out about was one of our big four banks basically had a division of a blockchain division before it was ever sort of publicly announced, and it was just squirreled away on the Sunshine Coast. I found that quite interesting. My next question, I think it was Ben that mentioned about some of the failures, or was it yourself mentioned about some of the failures recently, Jacob? So about when it comes to regulation, what do you expect to happen over the next sort of 12 months? Because like the failures of Celsius, the failures of Three Arrows Capital, etc., it wasn't quite the Mount Gox moment where it thought this could be the going away of crypto. But what do you see coming down the pipeline?
Yeah. So I think we can all agree, like when it comes to regulation, and I'm no regulator by any means, and obviously we work with all the regulators as close as possible and hold the utmost standards. That's a bit of a disclaimer there. But so I think we all need a bit more colour and clarity, because not just from a regulating and an investor or a business standpoint, there's division there, but then there's also division among businesses as well. Like if there's not a clear framework that we can see what we can build off and what we can move forward on, how are we meant to thrive and continue doing this? So I think obviously there is a lot of investment from the institutional side, and they're getting very active. So yeah, a bit more colour and clarity, when that's going to happen, I'm not 100% sure. I'd like it to see that sooner rather than later. I'm sure we all would. But yeah, colour and clarity from regulation. I think we all need some framework to build off, and yeah, we just need something clear, I think, that we can work off. And yeah.
So the only thing I want to comment is I don't think that the failure of things like Luna, Three Arrows Capital, and Celsius had nothing to do with a lack of or a part of regulation. That was mostly due to just pure greed, more than anything else. Like for
Which
example,
is also not unusual in the startup area as well.
Yeah, it's not unusual in anything to do with capital. So you didn't have an issue where Three Arrows Capital were basically, they were technically breaking laws, but the way they were able to get, if there was regulation in place to, regulate that type of investment, then, I don't think it would have stopped it happening. The same as Luna. It's really about, basically enough people FOMO into something and make it too big, then eventually there's an opportunity to short the shit out of it. And basically, if you create the exact right time to create a bit of a shorting opportunity, then you can pretty much facilitate it. But there's nothing, I don't think, really that regulation could have done. But I think the only thing regulators, from my experience, and I've dealt with regulators in like a lot of the Middle Eastern countries and a lot of Southeast Asian countries, is basically just how can we, is fiat on-ramps, how can we basically stop people from laundering money through crypto? And that's pretty much 90% of all I give a shit about. How to stop the people losing money and facilitating AML KYC.
Makes sense.
Yeah, maybe that's worth just adding that we've got quite short-term memories, and you probably just look back to 2008, 2009, and exactly the same thing happened, exact same wave of regulation in other markets. So and again, how we've structured our business is to try and preempt and model some of the lessons learned, and what we'll see, I'm sure exactly what we'll see, and they're already talking about some of the draft regulation, things like bankruptcy, remoteness of client assets, capital adequacy, KYT, KYC, AML, and so on is obviously just a given. So we'll just see more and more scrutiny. I think the unfortunate reality is it'll cost more to the end client, which will get passed on, because the cost of capital, cost of regulation, cost of discipline and risk management ultimately makes transactions more expensive, and some businesses not less viable. So you'll naturally see a few companies fall off. The regulations will come in and tighten all the basics around how other markets operate. So again, probably nothing new. It's just catching up, and the regulators will never catch up. So I think it's the due diligence on people in the industry to be prudent and be sensible and act on behalf of value, be that the customers or the stakeholders, the coin holders, whoever it is, and not greed, because ultimately they're the ones that will get crushed.
The only thing I'd add, we don't deal with institutions too much. We're on the more the retail side. a little bit more clarity in like the financial advice space would be really helpful as well. For a lot of the new participants that come into crypto tend to follow the latest YouTuber who's shilling God knows what with, you know, not disclosing payments and all sorts of different stuff. So for us, we're trying to work with the, you know, AFSL licenses. We're looking at different things. I was in New York the last couple of months over there at the Blockchain Australia sort of event, trying to work with the regulators to develop a bit of a guidelines on how we can actually deliver more, I guess, you know, confident advice around what is good investing versus what is not, without, you know, touching on the grey areas that's in the financial advice space in crypto. So yeah, a little bit of work there would be really helpful, I think, for everyone.
Interesting. I've got two more questions as the sort of minutes run down. Obviously, there's a lot of, you know, when it sort of comes crypto winter, you know, sort of money does go back to sort of BTC and ETH, right? What are some of the other projects that you guys are looking? Because obviously you mentioned altcoins, you know, get smashed the most typically in sort of crypto winter. What are some of the projects that you're looking at that you also think are potentially undervalued or that are doing some really great work that are not being recognised? You can start with anyone.
I can start with just the stablecoin space first of all. So the stablecoins, we look at data recently that we're actually seeing all-time high volume of stablecoins on exchanges, which is interesting because I think with the UST event, I would have thought there would have been a bit of a hit to the confidence around that stablecoin space, but we're actually seeing a lot of investors move a lot of their risk-on assets into stablecoins, potentially ready to deploy, you know, maybe when assets go lower. So I think the stablecoin space is still really exciting for investors that don't want to take their money into fiat. They can keep it in stables and transact and do different things, you know, on the stablecoin space. So that's an interesting area that I'm looking at as well.
Thanks, Ben. Luke?
I'd be a bit hesitant to recommend any investments considering, but
I was going to say not to recommend, just which projects would you find interesting?
The one project, this is more of a case study in how to start your crypto startup than anything else. So there's a project called Aleph, and what they basically did was instead of raising capital because they started in 2019 and it was a shitstorm, was basically what they did was they allowed people who were staking on Pulse, which is a network that pretty much no longer exists anymore, to basically stake against Aleph. Aleph would get their token rewards and then swap that in return for initial Aleph tokens. And then what allowed the project to do was basically get a $33,000 a month payment in these Pulse tokens, which are then sold to then fund the project. And they were able to basically kick this thing off without actually having to raise a single dollar of investor capital, which means that you don't end up in the same situation as an AVAX, Solana, any of these major projects that had these investor cliffs and then investor vesting schedules, which then obviously means the market goes up, the vesting schedule starts, and then you just see these same charts over again where, from your perspective, it's going to go up and then forever. And you can pretty much cycle through 80% of the projects that have raised capital through 18, 19, and they all pretty much look like that, where basically it's gone up because there's no tokens being released, low supply starts hitting the market, and then just shits the bed. So that was one thing that I found interesting, purely in the way that they raise capital. But as far as for the next cycle, I mean, I'd really only be going ETH as a main layer one, because once it starts scaling, all the other layer ones become sort of semi-redundant, like Solana, Polygon. I mean, I hate those two networks with a passion. But
Anyone else?
I think more generally is just stuff that's nimble and really has value. So like if they get a great layer one, all the rest will become redundant. So are they solving a real problem? We've got our own projects, which I probably won't mention, but there's things that are actually going to survive and that are nimble, scalable, true to certain principles of openness, data exchange, all that sort of stuff. So, and again, I'm coming from a more prudent background, so things that are there to actually, be balanced in how they operate. You mentioned stable coins, things that don't offer unsustainable returns. So again, common sense, low operate costs, things that you want to scale and aggregate.
So I was very fortunate enough, one of the speakers presenting today, Henrik from Apollo, I remember it was May 2019, I was at another sort of blockchain conference in Adelaide, and we were talking about when is the next sort of bull cycle for crypto. And I remember at that point he said, I think we're finally out of the winter. And my last question for everyone in our last sort of 2.5 minutes is, how do you see the role of the next sort of Bitcoin halving playing in this next sort of bull market cycle? And then how do you typically either invest towards it, or how do you see investments going to it from an exchange perspective, or how do you sort of guide or educate people on how to navigate it? Because obviously the last big cycles have sort of been centered around that as a center point.
Yeah, I'll go first. Without providing any recommendations, obviously, because we're completely agnostic. Typically, volume increases drastically. It's a great headline, the Bitcoin halving, and what you can study, obviously, what's happened previous times and where the movements have occurred and so on. To provide a prediction, that'd be I think potentially a foolish thing to do at this time, as there's still so many variables that we're unaware how they're going to play out. But yeah, in terms of popularity, it's definitely a buzzword and a flavour of the month when that occurs. So obviously, what happens after that, it's anyone's guess. I guess $1 trillion answer, I would say, in terms of that. But yeah.
Yep, I think we're dead set right in the accumulation phase right now. It's simple Wall Street cheat sheet shows pretty much that's where we're at. The halving 6 months either side is usually traditionally where the bull market lands. But for me, I think it's really got to do with the macro until the macro sort of cleans itself up.
And sorry, I didn't mention it. When is the next Bitcoin halving, just for everyone?
We're less than 2 years, I think. We're on the downward hill. So the other thing I want to mention is I think the Ethereum merge is something pretty bullish as well. I'm just going to shield Matt, our head of research, did a video on the Ethereum merge coming up, and that's really bullish. I think the supply shock when we move from proof of work to proof of stake is really exciting. And I think that's going to have a little bit of a push uphill, hopefully in the next 6 to 12 months.
I'm surprised Jason didn't tell everyone to go buy BNB, mate. So he wouldn't be happy with me.
That's it. Yeah.
The only thing I'll say is that, in my view, and I've been trading for a while, is that the bull market will start or the bear market will end when everybody thinks the whole thing's dead. Like when everyone throws the baby out with the bathwater out the window, the whole industry's dead. We're all going to zero. That's when it's over. So until then, we're still going down.
We've just ticked out of time, but I tend to agree. I think if it's 2 years away, then a lot can happen in crypto in 2 years. Hang in there and I guess watch close to the time. But yes, there'll be a lot of activity over the next 2 years, no matter what happens.
Well, ladies and gentlemen, that concludes the panel session. I'd like to say a big thank you to the panelists and also the respect they showed in not sort of promoting any projects or anything like that. It's actually really hard to get in a panel session in that. So thank you very much for everyone. Thanks so much for the insights.